Joining us now from our Sydney studio is Juan Delgado Morea, co-CEO of Hamilton Lane. Juan, good to see you. So we are seeing some concerns on private markets, especially given the pair of blow-ups not so long ago in private credit. Just like your thoughts first, I wonder if you could weigh in on what you see in your read in that situation in terms of the risk before we talk about the opportunities.
Sure, thank you for having me. That's fair enough. Private markets on the credit side, so private credit has been one of the best performing strategies for the last few years. So you have to have that as backdrop. And then you've seen effectively commentary around systemic risk, which we don't believe has been the case. The write-off ratio has increased a little bit. And a lot of the, ultimately, the due diligence and the underwriting has been resilient and robust. If you take a step back and look at the overall asset class that has been deployed over the last few years.
So do you expect to perhaps see more of this? And how much is there a risk for positioning overall in private markets?
Look, I think on the bigger picture question connected to the private credit discussion is this the canary in the coal mine? Is this signaling a potential turn in the cycle? Is it signaling worse to come for the overall public and private equity side of the markets? And our view is that's just not the case. There's been specific events in portfolios where the investors are by and large long-term, long-dated investors, not depositors, institutional, where their return comes from fund pools. And then if you go back and look at the equity side, we're seeing EBITDA growth, we're seeing revenue growth at a double-digit basis. And you have an environment where you've begun to see over the last few months quite an active exit and liquidity environment. So contrary to that being a leading indicator, we feel that the equity market and the private side is telling you that the growth is there and the liquidity that everyone's been hoping for so long is coming through.
So you're not seeing those concerns dampening some of that sentiment when it comes to private equity. And where are you seeing the growth opportunities at this point if you're not necessarily seeing those concerns actually really dampen the deals that you can expect to see in the sector?
Well, part of the question around concern is as if we run the risk of perceiving or discussing this as if it's the first time private equity, private credit faces a cycle, and that is important to highlight. It is not, and although it has grown significantly, it was highly active in the pre-GFC and went through that cycle. And so when you compare the data of today's companies versus companies in prior moments on cycles, you have less leverage, as I said, more fundamental growth, much more of a mid-market story that you're seeing in the public markets. And so that would be one of the answers to where is the opportunity. Institutional investors need to diversify away from the large cap public equity connected to the tech and the AI trade. And I think you're getting a lot of that in private markets. That's a very good opportunity. And again, you've seen private credit not to be underestimated. We've just gone through the last 2.5, 3 years where we had double digits for direct lending in private markets with very, very low rates. And those returns have been pocketed, by the way. So we would say equity, mid-cap equity, secondaries, infrastructure, strong areas of private markets opportunity.
And you're seeing that activity being as diverse here across Asia as it is in the U.S.?
No, of course. You have, and as you know, as you mentioned, I think in the interim, based in Hong Kong, been here for 15 years, and Hamilton Lane has a big practice in Asia. It's a big area with 6 offices. So the opportunity is different in the shape and nature. And that is actually, I say that as a positive, very much smaller on the private credit side was your opening question. So not even a blip relative to the overall size of the private markets in Asia, but much more of a growth story, much more consumer, domestic oriented, much more diversified by geography, and in a number of very interesting secular growth sectors. So we're very bullish on the Asia private equity opportunity. But of course, it's been growing, but it's smaller than the U.S., which, after all, represents close to 70% of the private equity market.
Juan, in terms of sectors, how much is AI dominating the deal flow?
Not as much. In the private market side, I should highlight private markets provides a very interesting and attractive entry point to AI, by the way, which is something somewhat overlooked. But it is one of these sectors. As I said earlier, if you're doing mid-market, and by mid-market I mean enterprise values below, let's just say $3 billion, you're able to invest in healthcare, in healthcare distribution, in business services, in industrials, which are not as geared to the AI, while you are also using venture capital, which, by the way, thrives in Australia and in Southeast Asia and in the region, and in India, of course, using that to get exposure to earlier stage AI plays and the AI application economy, which is going to be massive as well in Asia, of course.
Yeah, to your point, it's also a lot to do with greater access. Talk to us about how that is affecting Hamilton Lane's growth strategy in terms of perhaps the markets that you're focusing on with the legal, the banking structures to support these.
Well, so the services part is one of the sectors that you invest in private markets. But maybe an element of your question is our growth and a commentary of the development of private markets has been really an access play for a number of participants that were not, prior to the recent few years, had been able to invest in private markets. And you see that also on the AI pickup. A lot of the AI development is really held in private companies, and so you cannot get access to it directly through the public markets. All of that, I think, is bringing tremendous pull, tremendous attraction and interest in how do I get access to private markets. And as you know, Hamilton Lane has been at the forefront of developing evergreen funds and other means where the consumer, where the investor can get access to AI and many other of the drivers of private markets. Again, healthcare has been a big beneficiary, business services, and other, not just professional services, including industrials. We haven't mentioned data centers on the more real estate or infrastructure side. A big chunk of that capital is actually private markets funded. It's not funded by the public markets, both on the equity or the credit side.
Juan Delgado Moreira, really good to have you with us, co-CEO at Hamilton Lane.
Anytime.